Morning, everybody. It's the 22nd of September. We are Signal Centre Talking Ball. I'm Joan Oberon, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Good morning,
Good
all.
morning.
How are we?
All good, thanks.
Yeah, all
Excellent.
good.
All kicking off in the markets over the last 24
Booting
hours or
off.
so. Some big moves, exciting moves if you're the right side. Obviously, if you're not, then it can be quite painful. But I think we've all been hungry for a bit of an increase in volatility to create some better opportunities for trading. So let's dig into that, I guess, shall we? In terms of news, is there anything particularly stand out for either of you this morning?
No.
No, not really. News
So
is
it would appear that it's fears over how the second wave of coronavirus will impact the global economy, which is obviously dragging down stocks and risk assets. There's also some concerns over the relationship between the US and China. In terms of European stocks, it was the worst sell-off since June. And although we did see a little bit of a recovery from some of the US stocks into the US close, it still looks a little bit under pressure this morning, looking at things.
Yeah.
Anything
Run
on
to
the
safe
charts?
haven. Yeah, just breaking out now, quite aggressively actually.
Okay, put the charts
Dollar
up. So you got
index. So just breaking down from this. This was the monthly chart. This was a trend of higher lows that we noted a while ago, and then we've pushed up. We had some bearish divergence on the bullish divergence, sorry, on the daily chart, and then we've talked about this with sort of prime long entry was down here, which is around about 92. 40 odd or 92.50 odd, which is 61.8%, but it hasn't made it. And that strong risk off appetite yesterday has resulted on these breakouts basically. So we're just breaking out of what looks to be a reverse head and shoulders formation to the upside. And the measured move target is all the way up here. So bullish dollar basically, and reflecting that back onto euro dollar. We're just trying to break this trend, the neckline of this head and shoulders formation. I don't think cable's quite as bad, but we'll wait and see, and that will bring me on to my trade of the day idea in a minute. So we've had this expanding wedge formation. We broke it. That's the target level, which is 127.64, but we've got this fib down here, and I wonder if that's going to maybe line up with some announcement about Cobra, etc. So I'm not as bearish on sterling as I am on or sterling dollar as I am on the other pairs, and I'll talk about euro sterling when we get to the gun to the head. But everything else, like euro yen, especially we talked about the yen crosses yesterday. Head and shoulders breakout. You had a fib confluence area here, which is quite nice for some sort of Gartley pattern, and then the measured move target is down here, so it's still got a way to go. Euro yen.
okay.
That's me.
Cool. I mean, I've just sort of my take on a few of the dollar-based things. Obviously, Ian's touched upon there. Dollar index breaking out. I was looking at actually the daily charts, which you can see this sort of nice rounding bottoms taking place and a fairly clean break of that downtrend line there. If you look at cable, obviously note Ian's level that he's mentioned, that fib level, but just on my charts from the daily perspective, you've got a decent breaker trend there and a break of those key lows from the 11th of September. So there could be some buying coming in here, and if we close above that 27.62 level, then there may be scope for a bit of a bounce potentially. The other thing I was noting was gold, which we'd been talking about for a while, stuck in this triangle pattern, and yesterday we saw a fairly decisive break of that. Although we did close off the lows, looks pretty bearish, so there could be potentially a deeper correction to come in gold, and it could be a case of looking to sell rallies on an intraday basis. Steve, was you going to touch upon indices rather than me jumping
yeah,
jumping
I'm
on that?
happy to do that. Yeah.
Go on then.
The one that was really interesting to me was Nasdaq. Really, yesterday it had fantastic recovery from the sell-off, and that's a bullish hammer type candle. We've had weakness overnight, but one other thing I was looking at was the banking sector. Really, within Nasdaq, there's a bank index, and this doesn't look very pretty at all. The gap down. I mean, a lot of it probably based on HSBC, which has been hammered in the last few days. But obviously, if we go back to, we're starting to see levels we saw in July, and the Hang Seng as well for me is one that's really sort of pushing towards lows of June as well. A break of this 23,640 level. We're not far away from it, and a close below there would be very negative. So I'm sort of like thinking, is it going to be a little bit of a suck-in for the bears? But it doesn't feel like it at the moment. It feels like there's a little bit more to the downside. But we just had this, obviously, this fight back yesterday. The DAX, obviously, this ending wedge is broken and closed well below it. You could get a sort of like a recovery to there, but it'll still be negative. And CAC as well, sort of being down to levels seen in early August. So, yeah, the Nasdaq's the only one I would I feel okay about, but obviously it's supported by the FANG stocks. So yeah, the recovery yesterday, we've got to sort of wait and see. I think it's a break of yesterday's lows, and the indices, all indices, are in severe trouble.
Yeah. And it really probably only going to be a correction anyway, because they've had such ridiculous runs higher. So
yeah,
maybe it'll be an opportunity to buy the dip. I don't know. Obviously depends on what sort of action governments take with regards to coronavirus in the coming weeks, I guess. On the bank stocks that you touched upon, there was it news over the weekend about some dodgy dealings with HSBC and various others. I think there's something on Panorama on the BBC tonight at 7 o'clock. For anybody interested in taking a look at that, I think there's various people caught up in that. Abramovich was one of them I saw as well.
Right.
And I'm sure there'll be others as well. So, I mean, it doesn't look good for the banks. They was in a bit of trouble anyway, without, scandals. So that will clearly have an impact on indices, because banks typically are such a large weighting within indices themselves.
Yeah, so that bank index is quite a nice little. You can pick that up on the. That's a Nasdaq index, so you can pick it up there. You can see it sort of. If we go back, it's not at the greatest of times.
No.
So yeah, some sort of like support levels down here at 24,015. A break of there, a close below there, and we're looking to revisit the lows seen back in May and obviously in March, when it was really under pressure.
Yeah. Okay. Okay. So news-wise, we've obviously got a press conference today from Boris Johnson, where he's expected to announce some new rules in England surrounding leisure places. So talking about the pubs closing at 10. Obviously, there's a lot of people that have questioned whether or not that'll make any difference. Obviously, time will tell.
Just drink quicker, wouldn't you?
Yeah, or encourage more after parties back at people's houses. I don't know. Yeah, so it's we're all braced, I think, for. I don't think it's going to be as severe as the first level or first round of lockdown. What do you guys think?
No, I don't think it can be.
I don't think it will be. I was watching them analyse the numbers for infection rates and everything yesterday on the medical side of things.
Yeah.
And they were coming up with some quite amazing stats on what it could rise to if we don't do anything.
But I think that's the key thing. They were saying it could do that, because a lot of people, from what I'm seeing, are dragging these guys' names through the mud, saying, "Oh, they don't know what they're talking about," blah blah blah. I mean, everyone's just an expert now, it seems, but these guys are top professionals in their field, and they clearly said it could happen if we don't take any action. So
yeah, exactly. So we are taking action. There's still a lot of people still afraid to go out, so it isn't sort of like going to be as bad as they say, because I think are taking heed and listening and doing the right things. Not everyone is,
No.
and that's where the problem arises. So it's we'll have to wait and see how these sort of the scientific officers and medical officers, how good at analysing they are. But as you say, the key thing was this. They said this is what could happen if we don't do anything. So
yeah,
let's do something.
yeah. Okay, so let's have a look at the gun to the head stuff from yesterday. So
I was a bit annoyed. I got that rally in the last hour of trading on the Nasdaq.
Classic US indices, isn't it?
Yeah.
All right, share the screen. So obviously every day we pick 3 ideas off the bat which we feel could work out quite nicely on the session. We had yesterday selling Nasdaq, selling dollar yen, and selling Bitcoin. Nasdaq, as you say, Steve, was looking pretty decent at one stage, but the rally in the last hour meant that you closed 3/4 of an hour down. Ian stopped on US dollar, Japanese yen, and we had a decent win on Bitcoin. That was target
Nice one.
3.48R.
Lovely.
So overall, we had a 33% win rate, but we made money, and we are heading in the right direction with our P&L.
55R.
Yes.
Well done, Joe.
So yeah, decent. Let's hope we can back that up again today with fresh ideas. Ian, you sounded very prepared earlier.
Yeah, mine's gone already. I was going to try and stop you two waffling so that I could get in, but it's
all part of the tactics, mate.
Yeah, now 20 points lower than it was 5 minutes ago, which there must have been a little bit of news. So I'm just going to break down time frames because it might then go up a little bit. Weekly chart, trend line resistance here. We clipped it on the week 7th of September. We started to come lower. Not really bothered about the daily chart. Going to go straight into this chart here, which is 5 waves up, which should dictate that we get 3 waves down. We've got a confluence area here at 92.11, 92.10. We got our clients got short at 92.10 this morning. Hopefully. I actually wrote this call this morning, I should like to say, but only because the other one was buggered. And then going to the shorter time frame, it looks like a wedge formation. We got a bit of divergence there on that last spike to the upside, so I'm going to get short here with a target on the wedge and a stop above the spike, giving me 3R and short at 91.87, targeting 90.82 with a stop at 92.22.
Lovely. That's a very nice turnaround there.
Yeah, I like that candle.
Steve, have you got anything for us?
Not right now, but I can.
All right.
If you get the gun out.
Yeah, it's out.
Right. Okay.
You got one?
No.
Okay, I'm going to pick a random. I'm going to go for Canadian dollar, Swiss franc.
Yeah, get out of here.
Purely, I mean, there's nothing I can see on any charts other than the hourly chart, and there seems to be a decent outside bullish candle formed there. So I'm going to back that at current levels. I'm going to buy it at 68.79. I'm going to put a stop loss below that swing low at 68.58, and we've got to target something decent on the upside. Unfortunately, it's going to have to be above that swing high unless I just tighten the stop up a little bit. Yeah, let's go there. 68.62, targeting that swing high at 69.20, 2.35R from current levels.
Good luck.
Nice one.
Go on in, Steve.
I just came across this $1 Turkish lira.
Oh God.
Yeah. I mean, it's very, very volatile. Look at this sort of like the move we've had. Well, since the 20th of July, it's definitely moved one way, all going up. Nothing's stopping it, obviously, apart from me about to sort of join it. Let's do it. I'm going to buy $1 Turkish lira. 76.56. I'm going to, let's target a nice little, so this is on the hourly chart. What do we normally get on a daily? We normally get 62. How's that? I'm going to buy 765.60. The stop is at 764.60. The target is at 770.10. So a real humdinger.
Okay, good luck.
4.5 R.
That would be nice. Okay, so let's look forward to the day ahead. We've got an event in Washington. Jerome Powell, head of the Fed, is expected to stress the need for further direct fiscal support for the government in a session which is focused on the CARES Act. And elsewhere, we've got an appearance from the Bank of England Governor Bailey, followed by the Eurozone consumer confidence figure. That comes out at 3 p.m. The index is expected to fall to minus 14.9 from minus 14.7 a month earlier. And we also have US existing home sales at 3 o'clock. Sales are expected to rise 13% month on month. So a couple of bits of data out. Obviously, we've got Boris chatting at some point, which will confirm, which I think most of the press has already sort of reported on, that we are going to see some restrictions in place. Probably not too aggressive at this stage, but I imagine there'll be some warnings in there that things could get worse if people don't abide by the new restrictions. So we'll have to wait and see. Okay, I think that pretty much wraps everything up. Anybody else got anything else to add?
No.
Okay. Great. Well, let's wrap it up there then. Have a great day, everybody, and we will catch you all tomorrow morning.
Yeah.
Cheers.
Enjoy.
Bye bye.